Yes, take a look at the weekly chart of none other than Tesla. At Tuesday's annual meeting, Elon Musk warned that the next 12 months would be challenging for Tesla thanks to worldwide economic weakness. Williams doesn't dispute that the next year might be difficult for the company, but he feels a lot more constructive about Tesla's stock. Remember, they are two different things at times. I don't think Larry would argue with Musk about electric vehicles or rocket science. Stocks are another issue, though.
The way I trade, the way I value stocks is very unique to me. If you find something useful in it, by all means, take it on board. Everybody's risk profile is a little bit different. Everybody's risk tolerance has their limits. But let's get some insight on how Tesla stock is behaving and what investors might be doing. These are the stocks retail investors bought this week. This is at the end of last week. Figured I should give a little context on how I will be behaving this week. Individual investors are doubling down on tech. Tesla, a favorite among retail investors, topped the list of stock purchased over the past 5 trading sessions, according to data from Vanda Research. Many investors also piled into shares of Nvidia, which jumped 12% this week as investors look to bet on artificial intelligence. No shocker there. Retail investors investing in tech. Artificial intelligence is a thing. I have no doubt it will be very important in the long term, but in the intermediary and short term, it will become a data arms race between companies to decide who's going to make it and who's going to break it. And me personally, artificial intelligence will have many uses, but none more so important than full self-driving. Who's going to win that battle when you talk about artificial general intelligence? Probably the only company pursuing that avenue when it comes to full self-driving. Shout out to Waymo, who's already doing driverless taxis, but unfortunately they're not doing it in a manner that is a generalized solution. But they are setting the groundwork for general pros and cons for when Tesla's full self-driving is complete and the fleet awakens. So I too am betting on artificial intelligence. I'm just betting on Tesla being the one to solve it, implement it in their robotaxi fleet, and then, more importantly, in Optimus. Once artificial general intelligence has been attained and the software is smooth, not only will they be able to apply it in the vehicles, but they'll also be able to cross over that into a humanoid robot, because the Tesla vehicles are just robots. Instead of on 2 legs, they're on 4 wheels. So when you transfer that same software into another vehicle, instead that vehicle has arms and legs, it will be able to accomplish things with a few minor tweaks to the software. It's not an apples to apples comparison, but with the top engineers on the planet, Tesla will be able to make the conversion. Now on to Jim Cramer. And like me, take his information with a grain of salt. There may be some interesting information in here. I like to listen to it just to see what they're saying about Tesla. And based on my own assumptions and track record, I'd like to see if what I believe lines up with what they believe. In short, entertainment purposes only.
We're always searching for potential winners, especially in moments like this, where you might get a terrific buying opportunity the next time we hear about discouraging news about the debt ceiling negotiations, something that's almost a given since they love pointless drama down there in Washington, don't they? I'd still call that a high-quality problem, given that there were no negotiations to speak of just a couple of days ago. Right now, we're in a tricky moment, because if you want to know where the market's headed, you need to be able to game Washington in a high-pressure situation that's inherently unpredictable, right? At the same time, you've also got to game the Federal Reserve. Will they really pause the rate hikes at next month's meeting, or will they insist on lowering the boom on us again?
Any type of news that you get can scare the bots on the trading network. In the short term, it'll fry daily traders. And if you're not prepared, you could lose your shirt. On a weekly basis, the FUD has a little less impact, but depending on when you execute your trades, if some bad news comes out, or I don't know, Elon sells a bunch of shares to fund a controversial topic, I guess the overhang could last a little bit longer. But Cramer's right on this point. Any type of nonsense that comes out of the Fed potentially could fry your trades, and you gotta recognize that, be tranquil in the face of adversity, and make clear-headed decisions on if you're going to remain profitable depending on the expiration of potential securities. And I always believe that the safest thing to do is to buy a stock that you know will be around 10 years from now. I have a high level of confidence that Tesla will be around in 10 years, and not only will they be around, they will transform the way we live. I'm also assuming, based on my trading patterns and my stock portfolio, that it will be a very lucrative situation as well. I fully expect Tesla to be the most valuable company in the world. If you'd like to take a look at every trade that I've made or my current stake in Tesla, you could always join Patreon. You'll get access to my options tracker, which tracks every trade that I make, and my Tesla shares tracker, which tracks every time I have bought or sold shares. You can gain access by clicking the link in the description.
As we heard from several Fed heads in the last 24 hours. So, at times like these, you know what I like to do? I take a step back because it's hard for anybody to make an objective assessment of political issues. We all have our biases with this stuff. So it's tougher to analyze and say something nonpartisan like Procter & Gamble's gross margins. By the way, we own Procter for the Travel Trust, and it got bruised again today. And you know what I think? Bye. Sometimes you need to take your own subjective feelings out of the equation by consulting the technicians and the technicals. And that's why tonight we're going off the charts with the help of Larry Williams. He's the legendary technician and market historian who's been the top expert in the space since before I could drive. Larry's written over a dozen books and created a host of his own proprietary technical indicators, which you can find on his website, ireallytrade.com. You ought to go. It's fantastic. Plus, he's only getting better with age, as his recent track record's incredible. This is the guy who called the COVID bottom in the spring of 2020 when Wall Street was ready to jump out of the windows, okay? He called the big January rally at the beginning of this year. He realized the NASDAQ was ready and nailed the Netflix move, which, by the way, rallied 31 points today. So, what does Williams, who's so red hot, see right now? Well, you know what? He is actually feeling quite bullish about the broader market. But before that, let's talk about one stock that he likes in particular and that David Faber will certainly want to listen to. Yes, take a look at the weekly chart of none other than Tesla. At Tuesday's annual meeting, Elon Musk warned that the next 12 months would be challenging for Tesla thanks to worldwide economic weakness. Williams doesn't dispute that the next year might be difficult for the company, but he feels a lot more constructive about Tesla's stock. Remember, they are two different things at times.
Tesla's awesome performance in 2022, we saw a incredibly steep decline of Tesla stock in that same time period for no apparent reason other than Elon Musk purchasing Twitter. You could say that the purchase of Twitter and all the shares on the market were a catalyst for Tesla stock to fall. And as we know, the entire market was on an incredible slide due to the increased activity of the Fed. Now that the Fed rate is potentially going to pause its hikes in a wait-and-see approach, we're starting to see money flood back into the stock market after the mass exodus in 2022. No matter how Tesla navigates these next 12 months, they're going to be just fine. There will be individuals still purchasing their vehicles, their energy generation and storage products, and Tesla's success, in my opinion, is all but assured. Let's see what the chart says.
I don't think Larry would argue with Musk about electric vehicles or rocket science. Stocks are another issue, though. And right now, he thinks Tesla's got an awful lot going for it. Now let's go to these charts. Williams is always looking at the past action in any given stock to identify cycles that seem to repeat themselves over and over again, which they do. And Tesla sees both a long-term cycle and an intermediate-term cycle. You can see the longer-term cycle. That's the one in blue. This is a 42-month cycle. Tesla's major highs and lows have all pretty much stuck to this pattern ever since the stock began trading. Why does it matter? Okay, because right now the long-term cycle's looking pretty darn good. It bottomed near the end of last year, which is when the stock stopped going lower, right? And if history's any guide, this pattern says Tesla can keep rallying through the second quarter of next year. Rather than worrying about the next 12 months, Williams recommends buying the dips, although you might want to lighten up on your position into any of the big rallies. But look at this. You see where this is headed. Williams was so right on Netflix. This is the same kind of feel that I got about that call they made on Netflix. Now, speaking of big rallies, he says Tesla's due for one right now, right here, because there's another cycle that matters, the intermediate-term cycle, and that's in red. According to Williams, when Tesla gets to this phase in the cycle, historically it's rallied 80% of the time from right about now through early September. 80%, I will take that. I can't tell you why these cycles seem to repeat themselves. I can't explain why they often lead to successful trades. I can only point you to Larry's amazing data, because you can't argue with that kind of track record and you can't argue with his data. Now, check out this weekly chart of Tesla with Williams' proprietary indicator at the bottom that measures hedge fund and mutual fund buying. This is the other reason he's feeling positive on Tesla. These money managers have an excellent track record of buying the stock right before rallies. In other words, they're not contrary, they're actually correct. Over the last 4 weeks, they have been buying Tesla stock aggressively. That suggests the stock's getting ready for a big move higher. How about the daily chart with the same institutional money manager indicator at the bottom? You can see that even when Tesla's price has declined, the blue line, which shows professional accumulation, didn't go down. Nice. Money managers stuck with this one on weakness, and they tend to buy it right before strength. Plus, it doesn't hurt that Williams says the seasonal pattern is on Tesla's side right now, too. Okay, we've now exhausted all the great news about Tesla that you could have this week, haven't we? Well, I think this is the best of all if you're a stock guy. But let's see about the broader stock market. Right now, Williams is feeling darn good about the stocks for one simple reason. For over a year, inflation's been our number one worry, and right now, inflation, despite what you hear, despite what you see, is actually vanishing almost as quickly as it came. Here's a really important indicator nobody talks about. This is the New York Fed's underlying inflation gauge, which is very much headed in the right direction, wouldn't you say? This tells Williams that the Fed will soon back off on its rate hike. Maybe it takes one more meeting, but it likely won't be more than that. Now, I know this is contrary to a lot of the tough chatter you heard in the last 24 hours from various Fed leaders. But you know what? I'm not going with them. I'm going with Williams.
Now, who am I to say whether or not technical analysis works or not? Are you going to be right 100% of the time? No. You're going to be right 50% of the time. It is possible, but it's an extremely difficult, hard thing to accomplish. But there's some people that are more successful than others. When you take into account technical analysis, what it does is allow you to remove some of the emotions. But I'm going to be honest with you, nobody knows what the stock market's going to do. All you can do is make the best decisions that are aligned in your risk profile. And that's what I try to do. I'm not saying I'm super successful, but I've done fairly decent in the past couple of years navigating this bear market, getting in at the edge of the bull market, and then trying to navigate the bear market as best I can. I say that I haven't made any mistakes, but I've done fairly decent for myself, and I can't wait until we break out of the bear market and into the bull market. Being aware of those feelings, I also understand that my desire for the stock market to trend higher is ever present when I'm deciding to execute a trade. So I try to use technical analysis to curb those long-term conviction of success in Tesla and decide what's going to occur in the short term. It's a very tricky situation. The best thing an investor could do is to buy Tesla and hold it if they know that Tesla is going to be strong. I have a fair value estimate for Tesla in the bull case, the bear case, and the base case. And in my bull case, they solve artificial general intelligence and awaken the robotaxi fleet. The fair value estimate gets bananas. In my bear case, which doesn't account for any of the robotaxi, any of the energy side of Tesla, just pure automotive, I have Tesla over $350 per share, the fair value estimate. I try to use my bear case in terms of investing. And when I'm thinking about trading in the short term, whether it be a week, a month, or even some of these long calls that go out a year plus, I try to determine what are the macroeconomics, all of the events that Tesla holds, whether or not they're going to move the needle. There are so many factors, but ultimately I have a very long-term horizon for my investments in Tesla. I have to use technical analysis in the short term to make sure I don't convince myself that Tesla is going to go up and up and up in the short term, despite knowing where it will be in the next decade or so. Does technical analysis work? No. But I also don't know if quantum physics works. I don't know if string theory works. But I imagine those that are in the weeds of those particular fields of study probably have a better opinion on it than I do. I know nothing. All I know is that it will be a gamble if I decide to make a call that expires later this week, or in the next couple of weeks, or in the next month, or next couple of years. It will be a gamble regardless. How confident I am in the success of said gamble, plus my risk tolerance profile, will determine whether or not I execute those trades. With any trades that I execute, or any of the investments I make personally, I assume that that money is no longer available to me. I will never invest or trade any funds that I think I will need within the duration of that expiration date, or for long-term purposes when I'm investing in Tesla. That money no longer exists for me. That's enough of Jim Cramer. Let's go ahead and take a look at what we might do with Tesla, not only as a stock, but as a security. Looking at the chart pre-market Monday, I have no idea what Tesla's going to do. My opinion, which aligns with Jim Cramer and Williams's data, as we just saw, I believe it will also rise here. What I plan to do this week is buy a few shares here on Monday, reassess on Friday, and then buy a few more shares. I will also be purchasing an options contract for the week, and I'll probably purchase another one for a 2-week period. Because I believe the stock will trend higher in that time frame, I will be purchasing calls in that time period. I've already got some long-term calls. If you want access to all my current options, just click the Patreon link in the description, become a member. You'll get access to my options tracker, which I update weekly, and you can see what trades that I'm in, which trades that I exited, and you can also see my profit loss for the entire duration. There's many brokerage accounts out there that you can go with. I use Robinhood because I like what they offer. Subtle differences between each of the brokerage accounts. I like executing trades commission free and the perks that come with the Robinhood Gold. If you're in need of a brokerage account, want to get started, there's a link in the description. Gain additional rewards upon sign up. And that's all I got for you at the moment. If you're looking for more insight on how I trade Tesla securities or my current position in Tesla company, please join Patreon for more content, options tracker, and my Tesla shares tracker. Until next time, be easy. Peace.